Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick pattern in Nifty, Bank Nifty as well as the different asset classes. Now, before starting the video, just a general disclaimer. This video is only for education purpose. Please consult your financial advisor before investing and trading. Now, let us discuss what we have mentioned in our last video. In our last video, we have discussed that it was a vote on account budget. Market has taken a pause, and for particular, at least for the last week, market might consolidate, and market would wait for some clear view from the budget, and then it will take a direction. So after the budget was over, market remained strong, and on Friday we saw that after opening with positive gap, initially in the first stage market uh, rallied significantly. I mean, it is strongly higher, and then some sort of profit booking was seen at the higher levels and ended on a slightly flat to positive note. But the most important thing is that uh, on the overall basis, market has closed on a positive note. Yes, we will discuss on the charts that how the candlestick has formed and what could be the impact in the next week. So let us directly go to the Nifty daily charts. You will see on the screen the Nifty daily charts. In the Nifty daily chart, Nifty has been moving in this particular expanding triangle, what we call. The RSI is positive at this juncture. On Friday, it has formed uh, what we call as a doji kind of formation. So it was strong, and upward wick is clearly indicating that some sort of profit booking was seen. But the most important thing which I would like to highlight here is you can clearly see, uh, though it is a doji, but it has closed above this consolidation of maybe next last maybe 2 to 3 weeks. You can see Nifty has formed a slightly inverse head and shoulder formation, and it has managed to close above that particular consolidation, which is an inverse head and shoulder. So the potential target of this inverse head and shoulder is the upward trend line of this expanding channel, or a triangle, what we call as. So maybe most probably in the coming weeks or months, we will see Nifty heading higher from these levels and testing the upward resistance trend line. So definitely the momentum is positive that at this juncture. Maybe any uh, flat opening or some profit booking, continuation of profit booking, maybe 30-40 points in Nifty downside from these levels should be used as a buying opportunity looking at this particular charts. RSI is also positive, as I said earlier, from the comfortable zone. So there is nothing negative in the indicators. So definitely overall positive, it seems to be positive. So now let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed at 21,658. Below that, the second support is placed at 21,541. And third support in the Nifty is placed at 21,429. On the upside, the first resistance is placed at 22,022. If it crosses, then second resistance is at around 22,126, and third resistance is around 22,237. So these are the important supports and resistance level in in Nifty for the next week. Traders should watch out these levels closely, or one should also apply first half an hour to 45 minutes range in Nifty breakout for the trading strategy in Nifty or on the indices. One should mark highs and lows of the first half an hour to 45 minutes range in the Nifty and then trade accordingly in the direction of the breakout. But looking at the charts, we feel that the momentum is strong. Any dips should be used as a buying opportunity. So friends, now let us discuss the derivative data of Nifty calls. In Nifty calls, you can see that action was seen in 21,900 calls, the 22,000 calls, 22,100 calls, and 22,200 calls. Now here you can see uh, the option premiums are premium are positive. Implied volatility is between 13.11 and 13.24. There has been rise in the open interest. Somewhere there is shedding in the open interest. The volume concentration is most probably around the psychological mark of 22,000. So once that is taken out decisively, Nifty has potential to test the level of 22,200 to 22,300 also in the coming trading sessions. So most probably at this juncture, 22,000 could act as an immediate resistance. The data is positive at these levels. So nothing to worry about it at this juncture. So now let us discuss the Nifty put data. You can see on the screen in Nifty put, the action was seen in 21,800 puts and 21,700 puts, 21,600 puts and 21,500 puts. Now here most important thing which I would like to highlight is the drop in the option premium. The drop and the sharp drop in the option premium is clearly indicating that the smart money is already into writing out of the money puts or at the money puts also up to certain level. Implied volatility is between 13.92 and 14.75. Now, which is clearly indicating that smart money is already bullish on the Nifty. So maybe we may not see a sharp drop in the Nifty from these levels. Maybe some sort of cool off could be seen. You can clearly see that 21,800, where the strong volume concentration we can clearly identify from this data. So maybe that could act as an immediate support at this juncture. If it breaks and closes below that 21,800 mark, then only there are chances the Nifty might drift down to the levels of 21,500. But at this juncture, it seems that looking at the data, we feel that maybe 30-40 points of correction could be used as a buying opportunity in Nifty from these levels. So the data is already positive in Nifty, looking at the charts and option data. So friends, now let us discuss the Bank Nifty daily charts. In Bank Nifty daily charts, you will see on the screen. On the Bank Nifty daily charts, it has been moving into a polarizing channel, which was recently observed in the last couple of trading sessions, where prices are already in that, but comfortably in that particular range. You can clearly see there is a shadow, uh, which is clearly indicating that Bank Nifty has taken an attempt to break this particular rising channel, but it failed to do so because it was a Friday and sell-off seen in Bank Nifty. It has formed a bearish candle on the daily charts, but looking at the RSI is still with positive signals. So this bearish candle uh, might be uh, maybe for maybe 1 or 2 days, or its impact maybe for maybe 1 or 2 days. But looking at the overall chart, because it is inching higher and it has taken an attempt to break this particular resistance zone also. So maybe the bulls, sorry, the bears were trying to test the bulls, and on Friday the bears were the winners, but the overall chart seems to be positive. So maybe definitely any dips should be used as a buying opportunity, or if we see a gap up opening, and if there is an because the US markets were positive, and if we see any kind of the slightly cool off, that should be used as a buying opportunity in Bank Nifty. So looking at the US markets, we feel that we might see a positive opening or a positive gap up opening on Monday, and after positive opening, any dips should be used as a buying opportunity. So friends, let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 45,668. Below that, the second support is placed at 45,071. Third support is placed at 44,866. Whereas on the upside, the first resistance is placed at 46,306. Second resistance is placed around 46,892, and third resistance is placed around 47,212. These are the crucial supports and resistance level in Bank Nifty. Traders should follow these levels closely, and as I said, one should follow first half an hour to 45 minutes range breakout while trading on indices. Mark highs and lows of the first half an hour to 45 minutes, whatever is comfortable depending upon trader to trader, and trade in the direction of the breakout. So looking at this particular charts, we feel that yes, Friday was slightly weak, but overall chart seems to be positive. Any dips should be used as a buying opportunity. So friends, now let us discuss the derivative data of Bank Nifty calls. In Bank Nifty calls, you can clearly see that at the action was seen in 46,000 calls. Sorry for that. 46,500 calls and 47,000 calls. Now you can clearly see there has been a significant drop in the option premium, which clearly indicates that the smart money is already into writing out of the money calls in Bank Nifty. So slightly data is weak at this juncture, but the important thing is you can clearly see the shedding in option premium at 46,000 put strike prices, which is clearly indicating that the smart money might be have or might have started booking profits, which is at least initial signs of a bullish signal. You can clearly see 46,000, 46,100, and 46,200. There has been a shedding at these levels. Implied volatility is very high. It is between 15.97 and 17.33. So here I would like to put more importance to implied volatility, which is high, and shedding of the open interest in 46,000 to 46,200 strike prices, which is an indication that smart money might have already started booking profits, so which might give an early signals that after opening positive or a gap up opening on Monday, we might see there could be a sharp short covering in this particular writing of the out of the money calls, so which may propel the Bank Nifty on the upside. So friends, on immediate basis, 46,000 could act as a immediate resistance. If it breaks, or the comfort zone is 46,200 also. So if Bank Nifty breaks 46,000 and 46,200, then we might see a sharp short covering rally towards the level of 47,000 in next week itself. So definitely it is looking positive, uh, looking at the shedding of the open interest and high implied volatility. Friends, now let us discuss the Bank Nifty puts. In Bank Nifty puts, you can clearly see there is the option premium are slightly flat to positive, which means the smart traders are not that much bearish at this juncture. You can see there has been a rise in the open interest, and up to certain level there has been a small shedding in the open interest also. Implied volatility is very high. You can clearly see it is between 20.15 to 20.4547. So definitely this data is looking slight flattish, and as I said, if Bank Nifty crosses 46,200, then we might see uh, the writers in Bank Nifty puts getting active at this juncture. So one needs to be highly cautious at these levels. On immediate basis, 45,800 could act as a very strong support, looking at open interest and the volume concentration, but the implied volatility is very high. If Bank Nifty breaks 45,800, then there are chances that Bank Nifty might drift down to the levels of 45,500 to 45,000. But looking at the data, we don't think so. It will crack, or it will fall sharply at these levels. So definitely the data is positive. So one needs to be uh, slightly cautious while going short in Bank Nifty. So friends, let us come to the final segment of our show, which is positional call. I have identified one stock. Uh, you can clearly see the name of the stock is Bandhan Bank. You can clearly see the charts. The stock is consolidating in a tight range since November 2023 till date. So almost more than 12 to 15 months, the stock has been consolidating in this particular range. You can see a horizontal blue line, which is a multiple support region. The stock might be coming out with the numbers in couple of days, but looking at this particular pattern, you can see RSI is also positive. But looking at this particular purely on this basis of this particular pattern, we feel that buy on support and sell on resistance. So any swing traders, investors, short-term traders, short-term investors can look uh, this stock to buy or accumulate on dips to 220 for an upside target of 263 in short to medium term. Short to medium term means maybe next 3 to 4 months. The stock is looking positive, and we feel that history would be repeated in the coming months because multiple times the stock has taken a support around 210, and from there it has rallied. It has tested 250, 255, 260 multiple times. So the strategy specifically in this stock is buy on supports and sell on resistance. So any dips till 220 should can be used as a buying opportunity or an opportunity to accumulate the stock for an upside target of 263 in short to medium term. So, friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.